How to start investing in stocks with just $100 beginner's guide. Starting with a small amount, like $100, may seem challenging, but it's entirely possible to begin building wealth through stock investing even with limited capital. This beginner's guide provides a step-by-step approach on how to start investing in stocks with just $100, focusing on key strategies that maximize your potential gains while minimizing risks. 1. Understand the basics of stock investing. Before diving into stock investing, it's crucial to understand what stocks are and how they work. Stocks represent ownership in a company, and as a shareholder, you own a small piece of that company. When the company performs well, the value of your stock increases, and you can make money either by selling it for a profit, capital gains, or through dividends, regular payments made by the company to shareholders. Key concepts to understand: capital gains, profit from selling stocks at a higher price than what you paid. Dividends, a portion of a company's profits paid to shareholders regularly. Risk and return, the relationship between the potential rewards and the risks you take on when investing in stocks. 2. Choose a brokerage account. To buy stocks, you'll need to open a brokerage account. A brokerage is a platform that allows you to purchase, sell, and hold stocks. Nowadays, many brokerages offer commission-free trading, meaning you won't have to pay fees for each transaction, which is ideal when starting with a small amount. Look for a brokerage with low or no minimum deposit requirements. Some platforms allow you to open an account with as little as $0. Fractional shares. This feature allows you to buy a portion of a stock if the full share price is too high. For example, if Amazon stock costs $3,000 per share, you could invest $100 and buy a fraction of that stock. User-friendly interface. Choose a platform that's easy to navigate, especially for beginners. Popular options include Robinhood, Webull, Fidelity, and M1 Finance. 3. Focus on diversification. With just $100 to invest, you may not have enough capital to buy multiple individual stocks. However, diversification, spreading your money across different stocks to reduce risk, is still possible. The easiest way to diversify with a small amount is by investing in exchange-traded funds, ETFs. ETFs are collections of stocks or other assets bundled into a single investment. They allow you to invest in a wide range of companies across various industries with just one purchase, helping to spread risk. Many ETFs track indexes like the S&P 500, which includes 500 of the largest US companies, giving you exposure to the overall market. 4. Invest in blue chip or growth stocks. For beginners with limited funds, it's generally safer to focus on stable, well-established companies known as blue chip stocks. These companies have a track record of consistent performance and are less volatile than smaller, riskier stocks. Examples include Apple, Microsoft, and Johnson & Johnson. Alternatively, you could invest in growth stocks, companies expected to grow rapidly. These companies may not pay dividends, but tend to reinvest profits to expand, which could lead to significant increases in stock price over time. Just be mindful that growth stocks often carry higher risk due to market volatility. 5. Dollar cost averaging. One of the best strategies for beginners is dollar cost averaging, DCA. This approach involves consistently investing a fixed amount of money at regular intervals, regardless of the stock price. By investing $100 every month or quarter, you smooth out the market's ups and downs over time, buying more shares when prices are low and fewer shares when prices are high. This technique helps you avoid trying to time the market, predict price movements, which can be risky and stressful, especially for beginners. 6. Reinvest dividends. If you choose stocks or ETFs that pay dividends, consider reinvesting those dividends rather than withdrawing them. Many brokerages offer automatic dividend reinvestment programs, DRIP, that use the dividends to buy more shares of the stock or ETF. This is a powerful way to compound your investments over time. 7. Avoid common beginner mistakes. Investing is a long-term game, so it's important to avoid some common mistakes. Trying to get rich quick. Stock investing is not a lottery ticket. Focus on steady growth rather than hoping for overnight success. Investing in penny stocks, stocks that trade for less than $5, are often highly volatile and can lead to significant losses. Emotional trading. Don't buy or sell stocks based on short-term news or market swings. Stick to your plan and think long-term. 8. Track your progress and keep learning. Even with just $100, it's important to monitor your investments and track their performance. Most brokerages offer tools to help you evaluate how your portfolio is doing. Keep learning about the stock market by reading books, watching videos, or following financial news to stay informed. Conclusion: start small but think big. Investing with $100 may seem modest, but it's a great way to build the habit of investing and to learn how the stock market works. Over time, as you continue to add money and reinvest dividends, your investment can grow significantly. Remember, the key to successful investing is consistency, patience, and continuous learning. Even small investments, when managed wisely, can lead to big rewards in the long term.